Hello and welcome back to the channel. So in front of me I have a transcript of Schlumberger's earnings call from the 21st of April, and it has a lot of positive points for the offshore sector which I want to cover in this video. Firstly, if you don't know, Schlumberger is the biggest offshore drilling company and the world's largest offshore drilling contractor by revenue. So its revenue is 23 billion and it is the biggest out of all of the offshore services companies, etc. And it's done pretty well over the last couple of years, up 225% from the COVID lows, and it's been grinding higher, which I expect it to keep grinding higher. Okay, so let's cover the actual transcript from the call. So the first section we're going to look at is this section here, and I think this has some great points. So they say, moving on to the macro, we maintain a constructive multi-year growth outlook. Through the first quarter, the resilience, breadth and durability of the upcycle has only become more evident. So that's reaffirming that the first quarter is really showing that they still believe in a uptick in the upcycle of the offshore sector, and that it's just reaffirming their belief. This is also a very interesting point. He says, to begin, downtailing demand, investment and activity during the cycle are resilient despite short-term economics and demand uncertainties. So this is probably referring to the upcoming or looming recession that everybody keeps talking about of the US economy. And yeah, this is the biggest risk to the offshore sector, is that aspect of a recession, because if a recession hits and the demand for oil plummets and we see oil trading in the 50s, 60s, or if it ever gets down to the 40s, it's going to be pretty catastrophic for the offshore drillers. So that is the biggest risk at the moment, is recession and the demand for oil. Based on their comments, it seems that the sector is actually handling that very well. And that's mainly because of a combination of energy security and the initiation of long cycle projects and OPEC's policy set condition for decoupling of activity. So this section right here. So energy security is of course referring to what we saw with the war in Russia, you know, how that changed Europe's policy about energy security, etc. And the initiation of long cycle projects, I think this is advocating for the fact that offshore cycles or offshore projects are very long in the tooth. And that's why I also believe, because of this, these stocks aren't just going to do well for a year or two, but I think they're going to have a consistent year-on-year growth in terms of the stock price for at least a couple of years, even up to the decade. So I think these stocks will do really well from now till up to the decade, until we see, of course, the new builds coming online, you know, supply being too much supply versus demand, etc. And the second one is OPEC's policy sets the condition for decoupling of activity outlook for the short-term demand uncertainties. So this is referencing the surprise OPEC cuts that were announced after the Biden administration said that they would not be refilling the SPR. But you can see here Saudi Arabia is actually, they did a surprise cut of 500,000 barrels per day, including United Arab Emirates, Kuwait, basically all of OPEC plus. And unsurprisingly, they did not include Russia for some reason in this chart. But also Russia agreed to cut 500,000 barrels along with Saudi. And that really helps support the oil price. So, as you said, the biggest risk here is the recession looming and the demand for oil and the price of oil. And OPEC has actually shown that it is willing to defend the oil price by doing some cuts. So let's move on further down here. This section right here is also quite interesting, where they talk about the dimension of breadth and duration. And here they say, fundamentally, the pivot to both segments as anchor or supply growth is a defining attribute of this cycle. So this is clearly referring to the fact, I think, I'll pop up a chart here, where we spoke about previously how most of the proven reserves currently are now sitting in deep water and offshore. The proven reserves are no longer onshore, and really to exceed demand and bring on new supply to the market, they're really going to have to go offshore. And we've seen that in the Middle East as they've basically brought up all of the jackups, etc. And yeah, so that's a very good point as well. This is pretty cool to see as well. In the Middle East, the largest ever investment cycle has now commenced. So I hope that carries on and it replicates in my balance of my stocks. This is also quite interesting. The latest FDI projections and industry reports indicate that the offshore sector is set for its highest growth in a decade, with more than 200 billion in new projects through the next 2 years. So really some serious money pouring into the offshore sector. So we're seeing ongoing large development projects in both oil and gas that are ramping up and starting to scale. This is evident in Latin America, Guyana, Brazil, Middle East, Saudi Arabia, United Emirates, Qatar. Okay, let's move on to the. Is there anything else here? This, guys, I'll link this in the description below if you want to check it out. Yeah, I think the offshore sector is doing well. We're fully invested. Like, I think I only have like 10% of my portfolio in cash, which I hate keeping cash, to be honest. And yeah, but we're fully invested in the offshore sector. It's my biggest